Hello and welcome to our latest Insider interview. Today in the studio I have with me Chris Clothier, co-fund manager of the Capital Gearing Trust. Chris, thanks for coming in today.
Thanks for having me.
So Capital Gearing Trust is one of a small number of wealth preservation strategies. So what are the big risks at the moment that are concerning you for financial markets?
I think there are two big risks. The first is equity valuations, particularly in the US, which we feel are very stretched, particularly in the light of a slowing economy and because of the fact that the full impact of tariffs is yet to be felt. And equities look expensive relative to bonds. The second is the fiscal outlook for most developed economies, but particularly the US and the UK. And we're worried that the bond vigilantes, as they're called, might start to reassert themselves. And so you could see interest rates, particularly long-term government interest rates, rising quite dramatically.
Over the long term, capital gearing has outperformed inflation. So you've grown shareholders' wealth in real terms. However, the past 3 years has been a trickier period. In share price total return terms, you've made a small loss. Why has that happened?
The first reason is that the trust has gone from trading at a small premium to a small discount. So the NAV total return over that period has actually been positive, even though the share price return has been slightly negative. But clearly we're still disappointed with that. The second reason is that just that inflation itself has been very high over the past few years. And so that's created a real hurdle against which to perform. And finally, of course, we've been in a bond bear market. And as a defensive fund, we own a lot of bonds and that's created quite a headwind.
Around a third of the portfolio is in risk assets. And within that part of the portfolio, you invest in both investment trusts and exchange traded funds, ETFs. So when you identify a new idea, how do you decide whether to buy an investment trust or play it through an ETF?
We tend to be attracted to discounts in investment trusts, and that's what really draws us, rather than thinking of active versus passive. So what we're looking for is a discount, and a discount that we think is likely to close. And if we also really rate the manager of that investment trust, then so much the better. Where we can't find interesting investment trust opportunities, then we'll turn to ETFs and just get simple passive exposure.
One area you have been getting simple ETF exposure to is Japan. Could you explain why you're attracted to the region?
Yeah, I guess there's two reasons for that. The first is that we've felt that Japanese equities have looked pretty inexpensive. The yen looks very competitive, and there's a long academic literature that shows that weak currencies in turn correspond to good local equity performance. And then the third thing is just simply that there haven't been that many good opportunities in Japanese investment trusts for us to go after, although that's been changing recently.
And within either investment trusts or ETFs, what has been your most recent purchase?
Our most recent purchase is a slightly unconventional one. We have elected to convert our holding in Aberdeen Asian Focus convertibles into ordinary shares. So that meant that we effectively bought 3 million ordinary shares, or spent about £9 million. Now that's a trust that invests in Pan-Asian small and mid-cap portfolio. It's got a very good long-term track record. Currently stands on a 12% discount, and the chairman, on top of being a lover of cricket, is also determined to get the discount into a more acceptable level.
And for the investment trust that you own, could you highlight some attractive discount opportunities that you're playing at the moment?
Yeah, certainly. So one that we've held for a while, but we still think is interesting, is Smithson Investment Trusts. So that is part of the Terry Smith stable. It has a global portfolio of mid-cap growth stocks. It's well managed. It's been a bit out of favor. And there the discount is at about 12% today, and it has bought back about 20% of its share capital over the last year. And that means two things. First is just that buying back in that size on a discount is very accretive to the net asset value, but also we're pretty convinced that that discount's going to close, and so that'll give an uptick in performance. Another trust, which has been a long-term holding for ours, is North Atlantic Smallers. Now the name is a bit of a misnomer. It's really a portfolio of UK small cap and UK private equity. The fund manager, Chris Mills, has got a fantastic long-term track record. Now, admittedly, that's been a bit muted in the past couple of years, but that's no cause for concern from our perspective. And that stands on a 33% discount today. And then finally, I'd highlight a couple of the infrastructure investment trusts. So HICL and IMPP, those invest in pretty boring infrastructure, and I mean that as a compliment. And they trade on discounts of about 12% and 15% today.
And when you're sizing up potential investment trust discount opportunities, do you look to take advantage of the fact that some boards buy back their shares when their discount hits a certain level?
Yeah, absolutely. So a discount is not in and of itself interesting. You have to have a discount that you think is going to close for some reason or another. Our favourite situations are ones where the trust has made a promise to return capital at NAV or close to NAV at some point in the future. But failing that, where boards have made promises, so for instance they've said, oh well, you know, this shouldn't trade wider than a 5, and then if it is trading wider than that, well then that creates an opportunity for us, and perhaps we might then go and go to the board and remind them of the promises that they've made to the market, and encourage them to keep them.
And finally, Chris, it's our skin in the game question. Do you personally invest in capital gearing trust?
Excellent question. So I have the majority of my ISA and my pension in funds that we manage. I've actually just sold my house, and so quite a large chunk of the proceeds from that are sitting in capital gearing trust at the moment. But probably the most important thing from the perspective of your viewers is that my mum has substantially all of her savings in capital gearing trust, and she's not a woman I would like to disappoint.
Chris, thank you for your time today.
Thanks very much.
That's it for our latest Insider interview. Hope you've enjoyed it. We'd love to hear from you. You can let us know what you think by commenting, liking, and for more videos in our series, do hit that subscribe button. And hopefully, I'll see you again next time.